Hello, everyone. I hope your Friday is going well. I am looking to give you another update. We've gotten a lot of questions since we did the last one. And there have been some comments about, can you please repeat some of the information? So here I am. I wanted to just go over some slides to show you some information, some data for our changing market that we're having. So let me go ahead and pull up my document here so we can, there we go. All right. Yeah, definitely the market is changing. It is, you've seen it, people are dropping their prices, sellers are dropping their prices. There are more homes coming on the market, which is fantastic. That's exactly what we want. We want it to be a more of a balanced and fair market. So let's see, you know, what some folks, of course, have asked is that, you know, is this obviously an economic slowdown? How is that related to real estate? And how is that affecting the real estate? So some of these, basically all of these documents I have, they are researched and from the experts in the market. So I always love to make sure that I'm informed myself, and I like to share them with you guys. So basically, this very first slide is from mortgage specialist, who is basically saying throughout history during a recessionary period, interest rates go up at the beginning of the recession, but in order for the recession to come out of the recession, interest rates are going to be lowered to help the economy moving forward. Historically, we have seen a repeated uptick in interest rates, followed by lowered interest rates. And they're also saying, some of the experts are saying, over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage point from the peak. In many cases, they continue to fall after the fact, as it takes some time to turn things around, even when the recession is technically over. So that's what they're helping us, educating us on these. I love graphs. Visual is always wonderful to help with the whole message here. So recession really doesn't equal to the housing crisis. And I know that I've said that many times over and over, every opportunity that I've had. But here it is, just a visual showing that, again, in the last 6 recessions, you see that the home prices, home values actually have continued to increase. Of course, 2008 is a different story. We all know that. We've talked about it over and over. That was just a real estate crash due to, again, bad loans. And that was a different story. And in 1991, it went down a bit. So that's a good visual to have. Let's see, the next one basically here is that, let's see what the inventory looks like. And again, these are, let me get rid of this. These are my, the reports are nationwide, okay? So, but it's really good to know what's happening. We see it on the news, we see it in the paper and online, but it's good to have some more information as to what these experts are saying, predicting, and reminding us of the history of the past, what the patterns have been. So This one talks about inventory of homes for sale. And again, this is just for 2022 from January to May. This is where the May data is. I think they're probably working on the June data. It's about usually 2 months lagging in terms of data collection. So the let's see, in January, 1.6 homes were for sale, low inventory, right? February was 1.7. It kind of gradually came up little by little, and now in last May, we had pretty good inventory there. This one, we're talking about new monthly listing counts. So again, that's a different visual to show comparison between last year and this year based on the months. So last year we had, as you can see, 350, and these are in thousands listing counts. And this year, January, was much lower. But then it kind of started, inventory and listings started to increase as we moved forward into spring of this year, 2022. All right, let's see what else here. The existing home sale, that's another great visual here that again, it is just showing that, of course, in 2020 was crazy, 2021 crazier, and now in 2022, it has calmed down. Again, in a way, if you look at this prior to COVID, and I think there is another visual in few slides from now, that does show that we're basically coming down to pre-COVID time, pre-pandemic numbers. Let's see. Home sales have essentially returned, there we go, to levels seen in 2019 before the pandemic. So of course, the last 2 years were just gangbusters, as they say, and this is NAR, a chief economist there at NAR is reporting that. So the root issue of what drives housing prices, which I'm sure you've heard and you've read, and again, and this is supply and demand, simple as that, supply and demand, and now interest rates are and affecting that. So when interest rates go up, guess what? Fewer buyers are out there. It will eliminate some of the buyers who were on the cusp of price point, different price points. So the demand goes down, and as a result, the prices starts to get softer. And they won't be as crazy as we had it in the last 2 years. So this is all good. It's a more level field for everybody. Sorry, all right. Yeah. So then the big question is that, should I buy a home right now? Right, and that's what everybody is thinking. Those people who didn't win a contract in the last 2 years when interest rates were lower, and they just got frustrated and probably just waiting to see. And so the question is, should I buy now? Well, active inventory continues to grow, and we've seen it, and we are seeing, and it's going to continue to grow. And in other words, basically, we're starting to add more options for buyers, but the market needs even more than before. Home shoppers have a selection that's really roughly equivalent to pre-pandemic housing market. So it's good. We're seeing more homes, more listings on the market, but it's not enough. It's still not enough, not as many as we used to have pre-pandemic. So that's pretty much, there's still room to grow for inventory there. Let's see. Okay. Yeah, so forecast inventory, again, they kind of updated this. So when they were looking at the forecasting for this year earlier on, it was like, oh, it's going to be really, really still extremely slim, right? And now they are showing, no, it's inventory has grown 15%, so which is fantastic. All right. Let's see here. Okay, so the deceleration of home prices, basically does not mean the appreciation of home prices. Again, this is something we've talked about it, and we've shown some data on this in the past as well. So let me see if I can get rid of that thing there. Maybe I need to move it up. There we go. So home price forecast for 2022. Again, this, I've showed this visual many times, and I love that. I love it personally. And I love to present it because it does drive a lot of good points. The fact that all these 7 forecasters who are experts in the market, the higher ups, they all have predictions of higher, good price values there. So Fannie Mae is projecting 10.8%, Freddie Mac, CoreLogic, NAR, and the mortgage company itself. But when you're averaging all of these, some of them are more positive and some are not, maybe pessimistic side, but you average all of these data and you're coming to a 8.5% home values. So which is great. That's what they're talking about. That's what they're forecasting. And then the final highlights, I would say, of all of this, bits and pieces that you've seen and you've read or even hear, and through some of my videos and some of my posting and blogs and articles here, is really, we're receiving less, offers have gone down, receiving less offers, receiving the offers that are received, not all of them are over asking price. So that's important. As a result, of course, the sales has come down as lowered in terms of closing these properties. So, and then the exact effect of that is that there are more homes on the market and there is more inventory of them. Now, my personal takeaway here, all the takeaways and really final points, is that if you are a seller in this market and you're thinking to sell this year, so condition and pricing of your home, let me say that again, condition and actually correct pricing of your property is so important, actually matters more now than ever before. And so make sure who you're working with, that they are knowledgeable and they give you all the right advice in terms of your pricing and your condition of the property. Now we are still seeing some multiple offers on properties. That's again, properties that are in highly desirable locations, great pricing, and also fantastic conditions. They are still getting multiple offers. And you sellers out there, just expect to have your property on the market a bit longer. So days on the market, just expect it to be longer. And all of that is really related to how you have priced and what your property looks like. So for buyers in this market, you definitely have many choices. So that's a great news. You have a lot of choices, and there are less multiple offers to drive the property price high. So that's good for you. So less competition, okay? And there are contingencies are back in contracts. Now, I'm not going to say all contingencies. Again, that's all property specific, seller, buyer, is all like really affecting how all that negotiation goes. But we are seeing some contingencies that are in the contracts that buyers are putting them when they're submitting their offer. And the very last thing, which is super, super, super important for anybody who's thinking about buying, is that buy and go out there, look at homes, be active, and also lock your mortgage rate now, because you've heard it many times, they're going to increase the mortgage rates many times. So it's just financially makes sense that you lock your rate at whatever it is, the best rate that you can get now, rather than next year, in the early next year or end of this year, or whenever the future is for you, because as they increase the interest rate, you're in the long run paying a lot more for that house than if you were locked the rate now and in the next few months. So anyway, I hope this was helpful. I know that we got a lot of questions and inquiries. I've gotten texts and messages, and they've asked that to go over this stuff again. So here I am. But please follow us, like and subscribe, so you don't miss any valuable information that we're putting out there for everybody. Again, I believe in educating and answering and helping. And really, if the time is not good for you and is not right to buy, I will tell you. If it's not the right time to sell, I will tell you. So that's how I like to work with clients. So please, if there is any questions, call and text that phone number 703-386-7896. And I'll be happy to have a consultation with you and answer your questions and help you out. Until next time, have a great one.